Hi, I'm Laura Lutton. I'm here at the Morningstar Conference with Meredith Jones. She's the author of Women of the Street, Why Female Money Managers Make More Money and How You Can Too. Thanks for joining us.
Thanks for having me.
So tell us, what was the inspiration for the book?
Well, I actually started in the hedge fund industry in 1998, about 6 months before long-term capital blew up, which was a great timing on my part, I think, and I've spent a lot of time wondering why I'd gotten involved in the industry to begin with. But what was really interesting, I think, and a little disheartening was I didn't actually meet another person who looked like me who had a similar job to mine until 2007.
Wow.
So nearly 10 years after I started, I met another female that was doing manager selection, due diligence, portfolio construction. And after that, I became really interested in the dearth of women money managers. Why hadn't I come across more? And so I started to do research on women and minority-run funds and discovered that there was significant outperformance by these type of diversity funds. And over time, that interest really crystallized into being more interested in the women's side of the equation for fairly obvious reasons. And that's what inspired me to write the book.
So in your book, you lay out some of that research at the beginning, why women tend to outperform, and then you go into great detail on a number of women money managers that have very diverse strategies. What do they have in common?
Well, there's some traits that women tend to exhibit in terms of how they interact with the markets, and those are influenced by biology, they're influenced by cognition, and they are influenced by behavior. So, for example, women tend to really invest away from the herd. They're not necessarily looking for trendy, they tend to be long-term investors, and so they're looking for investments they can make that will sustain them for the long term. And if you look at all the women that I interviewed, you tend to see that recurring theme across all of them, whether they're hedge funds, long only, venture capital, private equity, real estate. You know, the holding periods were in the 2, 5, 10, even 15-year periods sometimes. Women are also very good at sticking to their knitting, so they are very good at consistently executing a strategy. And so if you look at the women that I interviewed, they all are very specific about what they look for in an investment, what causes them to invest, and what causes them to get out of an investment. And then the other thing is, even though people might think that women are more emotional when it comes to investing, that's actually the complete opposite of what's true. Women tend to be less emotional. And so when you look at the women that I interviewed, they were all very unemotionally, they weren't attached to their investments. They were investing strictly according to their guidelines. They were perfectly happy to take a step back. They weren't net sellers into the market meltdown of 2008, for example. And as a result, they have over time generated exceptionally high returns.
So they've shown a lot of patience.
A lot of patience, a lot of creativity, and also they've been willing to take risks. They all are risk takers. You can't generate returns without taking risk. And they've taken risk both within their portfolios and with their careers.
That's really interesting. So at Morningstar, we recently did a study and we found that the numbers of women fund managers, mutual fund managers, the numbers are similar to what you're talking about in private equity and hedge funds and so forth. So what do we do as an industry or in financial services to attract more women to money management?
Well, you're right. The numbers are abysmally low. The Morningstar study was just yet another nail in that coffin, I think. Right now, if you look at Wall Street, only about 5% of the people that are taking risk with capital are women. If you look at the hedge fund industry, there's an 80-to-1 male to female ratio. If you look at private equity, for example, there are 11 men named John James, 6 men named John, James, William, or Robert for every 0 female portfolio manager within a private equity firm. So the numbers are distressingly low. And I think that probably the best way to boost the numbers is to show research that there is a compelling financial reason to include more women within companies and to include more women within portfolios. We all know that investors and Wall Street are the most profit-driven individuals and companies that you can possibly find. And so if there is a dollar to be made for including more women in a portfolio or from hiring more women, I think that's really the key to changing behavior. And that will definitely increase demand as we go forward, and that will boost the number of women in the ranks of money management.
Thanks, Meredith. It's great to have you here.
Thank you.